Greetings everyone and welcome to my video. Today I'm going to show you how you can get started futures trading on Binance. So you probably heard about futures trading on different crypto exchanges. I prefer doing it on Binance and I'm going to show you how you can get started. First of all, you can click on your wallet and go to Overview. Here you will see your spot wallet, and further down here you will see two different futures wallet. If I click on the top one, USD futures, you can go to assets. Here you can see the different type of crypto you can trade in USD futures. If I click on coin futures, you can see here there's a lot more cryptocurrencies to choose from. Now, how do you get crypto into your futures wallet? All you have to do is, let's say I have some USD tether like here. I can go on transfer on the right side. In each internal transfer, yes, from fiat and spot to USD futures. Yes. And here I can click USD like this. I can select maximum and press confirm. Now it's $316. Now I can go up to the top here and I can select up to the top here, futures, USD futures. Now, if you haven't traded with futures before, you will see on the right side there is a possibility to insert a referral code. If you use the referral code create account, like displayed on the screen, you will save 10% on futures fees. Now we are at the front page of Binance Futures Trading. Here there is a lot of information, but I'm going to go through it with you. So on the left side, you can see your trading pair, BTC/USD Tether. You have a lot of different options here. And here you can search for whatever crypto you want to futures trade, right? But in this example, I'm going to show you Bitcoin USD Tether. You can see the current price. You can see the funding rates. You can see the change in the last hour. Here you can just change the graphs if you want to. On the right side, you can see people who are selling or shorting Bitcoin, meaning that they predict that the price will go lower. On the green side here, you see people predicting that the price will go higher, longing crypto. So if you're shorting something, you're expecting the price to go down. If you're long something, you're expecting the price to go up. Here you can see the different type of trades. There's a lot of trades every single second, so maybe not too informative. But on the right side here, you can see cross and 20x. Cross, you have cross and isolated. Cross means that if you have multiple futures position open and maybe one of them was supposed to get liquidated, but your other positions are doing well, instead of that one being liquidated, this one will drag your average profit down instead. So if you're holding a lot of positions, maybe cross is a better alternative. But if you're using isolated, the trade is isolated. So if you are going to get liquidated and the price hits the liquidation price, you are going to be liquidated. But with cross, if you have multiple futures trades open and many of them are doing well, you might not get liquidated. So a lot of pro traders, when they have a lot of trades open, usually use cross. On the right side here, you can adjust your leverage. Let's click on that one. Here you can see your leverage level. The higher the leverage, the more the fee cost and the lower or the higher the risk. As an example, if you take 125 leverage, the price difference either going up or down will be really small for you to be liquidated. So it's very risky. And there's some, maximum position of current leverage is $50,000. But so if you're new to futures, just try with 2, 3, 4x, maybe 5. But the higher the leverage, the more the risk, of course. Further down, you can set a limit and you can set a market buy. So what this means is that if you set a limit here, when Bitcoin hits this price, you can either go long or sell. And if you select market, you will buy in at the price exactly the second you press buy, either long or short. From a good trader's perspective, always use limit. I prefer doing that. And of course, when you're trading with futures, you need to dollar cost average in. So I can give you an example. If you think Bitcoin is going to go up and you would have a good entry about here, about 54,600, you place one long here with a small amount, maybe 5%, and then you place them further down, a lot further down, because that means that if the price suddenly should go a bit lower and then go up, your dollar cost averaging will help you to get a much better entry and to reduce the amount of risk. I've been in the group with Crypto God John and Elise and a lot of other traders, Income Shark, and that's usually that's how they trade futures. Set a little position here and then dollar cost averaging further down. And remember to always set take profits and stop loss, because if you have a lot of trades open, the market can change really fast and you can get liquidated, or maybe you won't take any profit because you didn't have any take profit levels. So always do take profit, always do stop loss. So when you do that, I can just show you an example here with a really small amount of Bitcoin. I'm going to show you here with 125 leverage, just so you get an idea. I'm going to select it to short. Here you can see my position down here. I'm BTC/USD. Here's my size. Here's my entry price. Here's my market price. My liquidation price, as you can see, it's not really far off. And margin radio. Margin. And my return of investment. Now, if I wanted to close at a certain price, I can just take profit level of 54,600. I can just type that in here. And on the right side here, you can add the take profit levels and stop loss levels. So this is what it looks like when you're trading futures on Binance. There's a lot of information. I'm just going to close that one. I don't really want to have it open. And yeah, that's simply it. So I hope this video was helpful. If you have any questions, feel free to comment below. Thank you.